Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Monday. It's April 11th. April is a third way behind us. Don't ask me where the year has gone. It's about 7:56 in the morning. The market's going to open up in about an hour and 34 minutes to be exact. And boy, oh boy, the Dow is down about 100 points, which really isn't very significant considering that our daily volatility has been anywhere from 700 to 450 points on the Dow over the past month and a half. But boy, oh boy, 146 on the NASDAQ, that's taking a spill out of the market. The biggest reason why this is the case is because there's more negative news from Russia and Ukraine, and Russia looks like they're going to be defaulting on their debt. That's a big factor. Let's talk about this week's news, and then I'll talk about today's breaking news, and I'll get into the analysis. And it's really important that you guys pay attention to this, especially beginning of the week, because the beginning of the week sets the tone for the remainder of the week, especially when you have a lot of Fed data. The big report this week is going to be CPI and retail sales. Industrial production is going to be important too, but if you want to know the big reports, it's going to be the consumer price index and how much it's gone up. Because if it's gone up significantly, then the Fed can say, hey, we're justifying our action in this aggressive rate hikes of 50 basis points or half a percent per quarter. That's significant. If the number is very light, then they can say, well, we're going to back away right now because the inflation is not that bad on the consumer. So it just depends on this number. It's a really big number. Producer price index too, but CPI is going to be the big one. We want to see the inflationary pressure on the consumer, then on the producer, and then we've got retail sales because this report here will impact 2/3 on the economy. So, and then industrial production is another major one. This will have a sneak peek into the supply chain issues and how much the supply chains are impacting the industrial production, and with impact lack of oil, the bottlenecks and all that stuff. So this week is really important. Fed is going to be speaking, but again, retail sales, huge report. CPI tomorrow is going to set the tone, especially in the bond market. Speaking of the bond market, we are breaking down. I thought we were going to hold this level. I was dead wrong, and this is why I only want to take positions to the short side because interest rates are going higher, which means bonds are going lower. So you've got look at this. I mean, look at this trend. The question is, how priced in are they? I mean, we went from 155 to 124. We've lost 30 points on the long bond, and I think it's too much too fast. Matter of fact, let me just put on the RSI here, and you could see RSI is in the red. I believe we're going to be pulling back up. I want to see us pull up quite a bit, and then I'll short this, but I'm not ready to do it quite yet. But the point is 30 points on the bonds, 30 points. I think they've priced in whatever the Fed has in store for us right now. I really do. Let's talk about global economy a little bit, and then I'll talk about markets. So the bond market is what we need to pay attention to this week. And if the CPI is weaker than expected, we may have a rally. If retail sales are better than expected, we may have a rally. I think the bond market, the long bond, is pricing in the worst case scenario because, I mean, look at this, 30 points, that's quite a lot. I mean, that is quite a lot. And I mean, really, I mean, we are already down to the base. I don't think we've got that much more to go. Let's talk a little bit about global economy. President Emmanuel Macron emerged from the first round of France's election facing a challenge from the far right. Investors are uneasy about plenty of things. Higher interest rates, Russia's war in Ukraine, Chinese effort to contain the COVID outbreak, and I'm really worried about this COVID outbreak if it starts heading its way through Europe and into U.S. Fed officials indicate in notes from last minute's meeting they are considering raising U.S. benchmark rates by double the normal amount at upcoming meetings to make up for the sins that they have committed last year and the year before by not taking any action. That's on you, Powell. They also indicated they may shrink the Fed's bond holdings, which might push up commercial borrowing rates, but it may also cause higher inflationary pressure. I believe most of what the Fed intends to do is priced into the bond market right now, and I think most of what we're going to see will be upside, especially in the next couple of months. China, automakers, other manufacturers are reducing production due to supply disruptions after authorities tightened anti-disease controls to stop corona outbreaks in Shanghai and other cities. It's like 2 years ago. Nothing has changed. Oil prices have fallen back on expectations of weaker demand after peaking at about $130 per barrel last month due to anxiety over disruptions of supplies from Russia, the world's #2 exporters. We may see more upside from energy markets. Put the call ratio is elevated. It's not at our threshold 1, but it's at 95 right now. And notice we've been around this area a lot more than we've been around this area. That means there's been a lot more put buyers than call buyers, and that means the markets are, in fact, stretched out to the downside. Now, looking at each individual sectors, cumulatively, healthcare is now going higher, but cumulatively, you still have energies, utilities, consumer staples, then healthcare, and healthcare has really been moving up, which is a great thing. But on a monthly basis, look at where healthcare is, look at where materials are, and look at where consumer discretionary are. We've been a lot more bullish over the last month than we've been for a long time. So we got to keep our eye on consumer discretionary, which is, look at this, over a month, we're up 9.75%. And that's after the Fed has told us that they're going to take extensive action. So the speculative stocks are actually responding pretty damn well right now. And volatility via the VIX, I mean, look at this. We're at 22 and we're in the middle of a war. So maybe a little bit higher and then another level down. Looking at levels, and I want to give you individual levels, and then I'll look at each individual sector. If we look at the levels, the key right now, really, folks, the key right now is this 200-day moving average. I want to see if we could stay near the 200-day moving average or fall back down. I think we can. I actually think we can stay up here and rally from these levels. But the 200-day moving average, which is at the 448 level, is key right now. If you look at the diamond, you will see that they're really struggling, but they're also near the 200-day moving average. And as long as we can consolidate and congest, we're going to hit it again. And if you look at the QQQ, we're a little further apart. Look at that. It looks like we're breaking down, but the other stocks are holding on pretty darn well. So looking at each individual sector, let me kind of give you a breakdown. Healthcare looks really bullish, but it looks like we're going to have a little pullback. This type of parabolic action will not sustain itself much longer. I like basic materials. I think they're going to go higher and swing higher and test and break above these resistance levels. Consumer discretionary, I think it's going to consolidate. I don't think it's going to go down. I think it's going to consolidate. Real estate's looking beautiful right now. Communication sectors looks like it could be broken down a little bit more. Financials look like they're starting to come up again right now. I like financials a lot right now. Utilities look like they're overdone. They may start consolidating. Consumer staples looks like they're going to start consolidating. Industrial stocks look like they're going to go a little bit higher. Energy looks like it's going up for another round up, and technology looks like it's cooling off. So markets are going to be mixed for the first few days this week. I really like the financials. I really, really like the financials and where they're at right now. May put more focus on those. If I was to pick two sectors that I'm loving right now, I would say financials look really good and basic materials. Those two look really, really, really good to me right now. In terms of momentum levels, things are looking stable. Don't overstay your welcome right now with this market. It's a crazy market. It's a lot of volatility. I'm not expecting too much directional bias this week. I'm actually expecting a lot more volatility. Let me show you the stocks that are starting to come up on my list. Always want to show you those. The new stocks, same old story. Look at that. Oxy, Mosaic, Halliburton, the same stocks. As far as new stocks, ADM, I mentioned that last week. AbView, but that's been up there for a while. NOV, that's a new one. I'm not seeing anything new. Maybe VRTX. That's pretty much it. Same old, same old, same old. Not a lot of rotation here. And on the downside, same thing. Etsy, PayPal, Netflix, Gap, Moderna. Not seeing much variety right now. So we're going to stick to the same old plan. We're going to be going long non-speculative stocks and shorting speculative stocks. We're actually short we're actually short right now. Zoom. Let's see how it's going to open this morning. Or it's going to open lower. Oop, yep, looks like it's going to open up that about a buck lower. Yeah, we've been short this since up here. It's been kind of giving us a heartburn, but it looks like it's finally moving our way. Anyway, folks, before I let you go, I've got something important for you. Folks, according to former hedge fund manager Lance Ippolito, he says don't even mess with stocks like Apple and Microsoft. If a high-level insider at a massive, well-known company buys into their own stock, it doesn't always warrant a tradable move. And Lance knows his stuff. But when the CEO of a smaller, more obscure company buys their own stock, that's when traders really want to pay attention. It's something Lance calls insider imprint. That's right. Click the link below to learn more about insider imprint and how to get notified on moves like the crazy moves you've been seeing with Lance's strategies lately. Follow the link below. Check it out. Talk to you guys later. Bye.